Hello and welcome to another Daily Dose of Insights powered by Container xChange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so we typically look at some of the charts that move container markets, both on the leasing and the trading side. Let me quickly share my screen to give you a little bit more guidance of what I'm talking about. There you go. So this is a snapshot of our insights data product. These are trading prices, 40-foot high cube cargo worthy in Ningbo, Shanghai, Hamburg. Ningbo, Shanghai are the Chinese locations being the blue lines here with weekly data points, and green being Hamburg. And as you can see, since the beginning of the Houthi situation, so to speak, in the middle of December, we've significantly increased trading prices for those 40-foot high cube units, specifically in China, because there's expected tightness around equipment availability in Chinese main ports ahead of Chinese New Year, because the loop around Africa, around the Cape of Good Hope, essentially soaks up capacity and delays the return of empty equipment to China. And this is exactly what we see here. So the container prices in Europe, so Hamburg is an example here, relatively stable, relatively flat, but China significant increases here from around 2,800 to 2,100. And bear in mind, these are weekly averages. So actually the trading spot prices that we see on the market are actually right now a little bit higher. We can also look at what this means for brand new units. Here you see it's actually very, very condensed on the same level. Also Hamburg being and remaining relatively high. But the music is really in the cargo worthy in the second-hand market. And this also now has an impact. This widening gap of container prices now also has an impact, of course, on the leasing market. So let's switch tabs here. These are leasing rates, again, Shanghai and Ningbo as origins to Hamburg. And as you can see here, and we've already seen a continuous price increase since round about August, September, from a low of round about $200 for a one-way move from Shanghai or Ningbo to Hamburg. These are sort of we call it pickup charges. So the fee that you have to pay for moving the container just one way from a good location, an expensive location, to a cheaper location to Hamburg. So you pay a one-off fee and then a daily rental charge. And because the price gap, the trading price gap is widening, we've seen this also sort of increase over the past couple of months. And then really the spike has happened here since the beginning of the year. So really since it became clear that the attacks by the Houthis in the Red Sea are not just a passing phenomena, but have serious implications on routings of container vessels and hence delay of containers in the return trip to China. And now we see this topping easily $800 here for a one-way move. That's it from me from today. Just wanted to give you a quick snapshot here of how we are seeing the market and, of course, what kind of data our customers can use to make better decisions. Unfortunately, there's no crystal ball included as of yet, so we don't know how trading prices and leasing prices will develop over the coming weeks. What we do expect, though, is that after Chinese New Year, the situation will decelerate and ease up quite significantly because we'll see a drop in demand. Carriers will be able to reconfigure their networks and sort of adjust to the longer transit times around the Cape of Good Hope. And we still have a structural supply-demand imbalance with a significant supply overhang. Also very interesting, just spoke to a military expert just recently, and he mentioned he doesn't expect that there's a military solution to the crisis in the Red Sea. The Saudis and UAE have tried to fight the Houthis from the air, so with airstrikes for years now, without any real success. They're using mobile launchers that are very difficult to take out, and the drones are essentially homemade or domestic made with very cheap parts. And so it's very, very difficult to really hit them the way it hurts, so that their operations are significantly deteriorated, so to speak. So no real military solution on the horizon yet. So we will probably have to live with this for a little longer. So now I'll stop talking. Thanks a lot for tuning in. Thanks a lot and have a good rest of the week. See you on Friday. Take care.